we're talking about 36 million plus ounces of silver in a stand for delivery on COMEX. And coincidentally, the whole of the COMEX system had a data fault. Now, did they pull the plug because they couldn't resolve the situation? I mean, we're talking about a delivery of $2 billion worth of silver. This is large. There was also a very large delivery of gold, over 58 tons on that same day. So, I mean, I think the markets are showing huge, great strength.
If you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation.
It's hard to ignore a move that looks strong on the surface but behaves nothing like a typical speculative surge. That's the strange thing Alasdair Macleod keeps pointing to. Gold and silver are marching higher, yet COMEX open interest, the usual yardstick for how many traders are piling into the market, is unusually low. Gold's open interest sits near 420,000 contracts, a level you'd expect during exhaustion, not during an upswing. In other words, the rally isn't being pushed by fast money speculators. Something else is at work. Silver is where the tension shows most clearly. The big institutions that normally lean on the paper side of the market don't have an easy way out of their short positions anymore. That's why some analysts are whispering that we might be seeing the early failure of the silver derivative structure in both London and COMEX. It sounds dramatic, but the logic is simple. This system survives only as long as the short side can roll, hedge, and absorb pressure. If they can't, the machinery starts to seize. Then there's the Shanghai wrinkle. Word went around that someone was preparing to make a massive stand for delivery in Western markets. Not long after, COMEX was hit with demands for more than 36 million ounces of silver in one shot, plus roughly 58 tons of gold. That's not noise. That's a coordinated grab for physical metal. And right on cue, COMEX reported a data failure. The timing couldn't be more suspicious. A system already strained by a $2 billion delivery request suddenly can't produce clean numbers. Whether that's coincidence or a hint of deeper stress, the pressure on the physical side is getting hard to hide. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
In both gold and silver, we've got this extraordinary situation with metals going into new high ground or not far off it, definitely in bull markets. And the speculative interest on the buy side, as it were, is minimal. I mean, if you look at the open interest on COMEX for gold, that's less than 420,000 contracts. I mean, that's sort of oversold level. I mean, not deep oversold, but pretty near it. And this is the fascinating thing. Gold and silver are rising without any speculative input. I mean, it's obviously a little bit, but I mean, it's tiny, if anything. I mean, it's really a squeeze on the establishment, on the paper establishment. And I think that, particularly in the case of silver, it's very difficult for the establishment actually to close out their positions. And consequently, we could be seeing, if you like, the end of the silver contract in both forward markets in London and also on COMEX. Now, that's quite a statement, because so long as I've been looking at the relationship between physical and derivatives, there have been gold bugs saying the derivatives are used to suppress the price of gold, suppress the price of silver, and so on. I mean, undoubtedly that is true. But if that's coming to an end, then there is going to be massive buying pressure from that end alone. As people move out of paper, where they've got paper and they think they've got exposure to the price, as it were, they'll move out of paper and have to move into the physical. So I think we're seeing potentially momentous events. Silver could be breaking, if you like, the commodity derivative system. And that's a fascinating thought. It's not buyers doing it. It's basically the shorts refusing to go even shorter. They're trying to control the position. And worse than that, they're finding the few buyers in the market are standing for delivery. I mean, there's a fascinating thing which happened last week, I think on Thursday. There was a story apparently going around the Shanghai Gold Exchange and the Shanghai Futures Exchange that there was going to be a large stand for delivery in Western capital markets.
Oh, yes.
And yeah, there was actually, as it turned out. We're talking about 36 million plus ounces of silver in a stand for delivery on COMEX. And coincidentally, the whole of the COMEX system had a data fault. Now, did they pull the plug because they couldn't resolve the situation? I mean, we're talking about a delivery of $2 billion worth of silver. This is large. There was also a very large delivery of gold, over 58 tons on that same day. So, yeah, I mean, I think the markets are showing huge, great strain. Now, the fact that the rumor started in Shanghai rather suggests that the stand for delivery was of Chinese origin, or at least origin in that part of the world, and was known in that part of the world. I mean, I could certainly see, someone standing for delivery like that would be quite happy to talk to his chums, if you like, and say, guess what? I'm standing for delivery for $2 billion worth of silver. And I reckon that that's going to tip the market up, or whatever I say, but you can see how the rumor might start there.
Yeah.
And confirm, if you like, that it's Chinese sources who actually went for it. But the other thing that's fascinating is, was it just coincidence that a data center had to shut down because it was overheating? No, I read somewhere by someone who is supposedly an engineering expert on cooling systems that data centers like that not only have one complete backup system, which automatically switches in if the principal one fails, but usually they have a backup to the backup. So this failure system is a bit fishy.
Here's the picture Andy Schectman is trying to get across, and it hits harder when you look at the numbers. Just a few days into the December delivery cycle, COMEX is already facing requests for nearly 24,000 gold contracts. That's about 2.4 million ounces of metal. Silver is showing even more pressure, with more than 8,300 contracts standing, roughly 42 million ounces. And the month has barely begun. What makes this jump stand out is the context. November isn't usually a heavy delivery month, yet it saw close to 20 million ounces of silver and more than 1 million ounces of gold leave the exchange. Off months aren't supposed to behave like that. This year they have, and now December is pushing it even further. Schectman's point is that this isn't a blip. Physical delivery has been strong all year, and the pace is accelerating. Since the start of October, about 90 million ounces of silver have drained out of COMEX. That's not the profile of a relaxed market. That's a stressed system where more participants want metal they can touch, not futures contracts or ETF shares. That's why he uses the cookie box analogy. Everyone assumed the box was full. Now people are opening it, reaching inside, and discovering there isn't much left. Let's get back to the interview.
Only 2 days, well, today's day 3, I don't have the numbers yet, but 2 days into the December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But the first day, this month, the December contract, day one, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, that's day one, and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted. And it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX this year, and since October, pardon me. And I don't know, since October 1st, 90 million, it's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, let's make an analogy, right? For years, everyone pretended that, let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside. And the thing of it, and they would trade that. But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising. And why the dollar and other currencies may look weak when the truth comes out. So, yeah, I think it's a big deal. There was this report that JP Morgan shifted its offices to Asia in the middle of the night, that they were told that the people had like 5 days to move their family and everything to Singapore. I believe that is false. So everything that I'm reading tells me that that's not true. I guess we'll find out and we will see, but I know a lot of people have been asking about that. The bottom line, then again, to me, is that the market runs on trust. And when you believe that you'll get delivery of what you were promised, and that trust has been built up over decades, then the system works. And you buy a contract, you can stand for delivery. The metal's there. That's why COMEX has set the price of gold and silver forever. And the analogy is like a bridge that handles a whole bunch of weight until it doesn't, like the 35W bridge in Minnesota that collapsed that I drove over 5 million times. And you're seeing that in London. You're seeing that in the COMEX now. And I don't know. I think that this is going to be a story that gains a lot of traction over the coming weeks and months. I think that the price of silver is just beginning. I really, truly, truly do.
Strangely enough, the clues are lining up in a way that's hard to brush off. A quiet futures market paired with surging physical demand isn't a pattern you see when everything is functioning smoothly. The drawdowns, the oversized delivery demands, the sudden reporting hiccups, each piece adds weight to the idea that the paper side of the precious metals market is losing its grip. When the usual players can't lean on leverage, and buyers insist on taking metal out of the system instead of rolling contracts, the old mechanics stop working. That's the kind of shift that doesn't announce itself with headlines. It shows up in stress fractures. Whether this resolves gently or snaps into something more dramatic, the balance between paper and physical is tilting faster than most expected. As physical demand keeps chipping away at inventories while open interest stays muted, do you think we're watching the early stages of a broader repricing where actual metal, not futures, starts dictating the narrative? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.